Good morning, it's May 3rd. I'm Steve Rand, this is Tim Murphy, and this is the Gold Spot. Tim, we're seeing another bank go under this week, First Republic Bank, actually last week, and it's creating more and more news and of course more concerns that this banking crisis may continue. They're saying up to 200 banks may fail overall. This one was swallowed up by JP Morgan, but it's again, the big banks getting bigger. On top of that, we've got supply deficits everywhere. It's happening here. We're finding difficulty finding certain products. We have product for customers, but it's not as easy to get things as it used to be, and certainly not on the supplies that we used to be able to get it for. But what's happening around the world?
Yeah, Steve, around the world, it's very critical right now. Supplies for silver and gold, especially silver, are waning. They're critically low at all levels. At the big producer level, the inventories are low, and especially in the New York Commodity Exchange and the London Exchange, the inventories that they need to operate the exchanges, they're being depleted. So it's a very critical situation, and even at our level, at the retail level, we're noticing shortages here and there. And the next time we have a crisis or something really big, we could run out again, and it could be even worse than it was back in the COVID days.
Yeah, I mean, there were several times in the last few years, including COVID, and then of course just recently when we saw the collapse of Silicon Valley Bank, and that drove a lot of people to us because people were concerned about keeping their money in the bank. And of course, what's going on around the world right now with a lot of countries leaving the US dollar, more countries moving to the BRICS nations. But that's leading to a separation in price, not just the supply deficit, but then again, there's also the difference in price between physical and paper. How does that work?
So what we have a situation that's everyone needs to know about this if they're not already aware of it. But we have bullion banks like JP Morgan are selling on a daily basis in the Commodity Exchange and in the London Exchange. They're selling silver, they're selling gold, they're keeping the price down. And this is critical because by keeping the price down, it allows the central banks to come in and scoop everything up and take everything off the inventories. And at the same time, you've got producers are producing less silver and gold because the prices have been relatively low. And also you have the public, which is not super excited right now about especially silver, but also gold, because the prices are not moving. They're sort of going sideways. And JP Morgan, for example, they go in and they sell in the paper market, but you can only sell so much. You have to have physical silver and gold in order to maintain this scam, if you want to call it that. So we're at a very critical point right now where we're running out of the silver, we're running out of physical silver and gold, and so these bullion banks are going to, at some point very, very soon, maybe now, are going to have to stop selling, and they're going to have to turn around and buy back the shorts, and it's very, very bullish for the price of gold and silver.
Yeah, it definitely is, and the key to this really is, let's take advantage of these prices while they are low, because we're not going to be there forever. These banks cannot continue to keep these prices down at these levels. It's getting exposed. It's getting more difficult for them to be able to create this type of problem that they have on their hands here. So hope that helps. We'll see you next week on the Gold Spot.